Hey guys, welcome back. Patrick here. Let me ask you a quick question. Which SPAC do you think might actually be saved by the current market where a lot of SPACs and growth stocks have been getting completely wrecked? Which SPAC might actually benefit from all these valuations coming down? More uncertainty in the market and even a little bit of a liquidity crisis, right? There's a lot less SPACs coming into the market and less IPOs. Well, if you guess Bill Ackman and PSTH, I'm going to have to agree with you. I feel like this market plays completely in their favor. However, I can make a great case right now for either investing more in this company or actually selling all of my shares, cashing out, and then investing in something else. So that's why I wanted to make this video today. Let's discuss it. Let's see what's happening with PSTH, and we can talk about what your position is. I want your opinion in the comments to see, like, should I be selling this one or should I be buying more right now? So let's get started. Alright guys, please don't forget to like and subscribe, and also get your $50 free from SoFi. Link is in the description and in the comments. I use it every day. It's very easy and convenient, and they keep adding new features. Usually when I make one of these videos, I have a very clear idea of if I should be buying or selling some of these stocks. I mean, usually it's pretty clear cut, but it feels like PSTH inverts everything, and that's why it's this very interesting example for us to look into. So if you guys look at the chart, back in February, it peaked above $30. And what was behind this share price? Absolutely nothing, only pure speculation and rumors. If you guys remember, there has been many rumors in the past around this company, right? They could have been merging with Airbnb. Stripe has been one of the constant ones. And there's been Bloomberg has been a frequent one. But if you look at the timeline, right, it really doesn't fit with the economy at the time. Back in February, all of these companies, right, the share price and the market value had increased for the past year, like literally skyrocketed. So this was a very poor time for PSTH. The companies didn't want to merge with these SPACs, right? Only the smaller companies that don't have name recognition wanted to merge with SPACs. So you had Airbnb that decided to do their own IPO. Right? They were supposed to list at 50 to 60 bucks, and they ended up opening at 150. And look at where they're at now. You had other companies like Roblox, Coinbase, companies like those decided, hey, we're just going to IPO or do direct listings. We're not going to go through a SPAC. So this made no sense, right? This was the worst time ever for PSTH, even though the share price was at its highest. Now, though, the market is favoring this company. The more instability there is in the market, the more it favors PSTH. And yet, the share price has been crashing. This is exactly what creates the big dilemma that I have with this company. Right now, the risk versus reward is much more attractive than what it was in the past. So why would you ever want to sell this company when at $23.73, it is very close to the amount of money that they have in their bank account? So worst case scenario, you can redeem your shares and get this money back. That gives a lot of safety in a market where all the growth stocks are crashing in price and values, right? So everything else in our portfolio is going down, while you have this one where most of the pain has been had already, unless you bought at $30 plus, right? You almost have nothing left to lose at this point, and they're much more likely to get into a deal now at a good valuation than they were in January and February when companies like Airbnb were going public. On the flip side of that, what's really getting me thinking about selling this company is which target could they possibly acquire? And remember, right now, every day, every time a company goes public, their list of the unicorns, right, the potential universe is shrinking. So every day that passes, they have less and less targets available. In fact, Bill Ackman wanted to get a deal done by the end of the first quarter and then merge in the second quarter. Now that timeline is out the window, most likely because of this big period here where the values were skyrocketing. So like when he was negotiating with these companies, he didn't really have a lot of leverage. They had all of the leverage. So I feel like the tables are turning in Bill Ackman's favor. Now when he's negotiating with these companies, he has a lot more leverage than he did back then. In the past, remember, like, it's almost guaranteed that they had discussions with Stripe and with Airbnb. You guys saw all the memes, you saw all the rumors, right? So we know this has happened. However, they could just say, like, if they weren't getting the best terms, they could just say, no thanks. I mean, we'll be patient. We're going to get much better doing our own IPO or direct listing, or at some point there's going to be another SPAC with more money. They're going to get money from like private investors. There's a lot of ways how those companies could have gotten better terms than from Bill Ackman and PSTH. Now things are a little bit different, and it is in his favor. So that is the pros for this transaction, right? It has a lot more safety than it did before, and also there's some reward there. But that's what I want to focus on next, is the reward aspect of this equation. I feel is getting kneecapped right now by the market. Think about which company can he possibly land that would actually make the share price go up right now. Like all the rumors that we've heard before, Stripe, Bloomberg, which would be very good cash flow, and you guys know that he's all about cash flow and, you know, having that moat and all of that. So there's those two companies like Instacart. I mean, it's not that exciting in my opinion. Well, all of those have big issues with them, right? You're not going to be able to get them at a discount to the rest of the market that in this environment is going to make the share price go up a lot. So yeah, the risk is lower, but the reward has also been kneecapped. So now, even if they announce something great, like maybe the only one that would make the value go up in the short term, in my opinion, is Stripe, just because of the meme factor and, you know, like the retail investors are really focusing on it. But in general, with the rest of the market, I don't expect that there's going to be anywhere type of momentum as we would have if they announced something in January or February when everyone was ravenous for these types of deals. So I was thinking about it, and I'm like, I feel like right now there's a huge opportunity cost to owning the stock. So what do you guys think, right? I mean, I can sell this one for 24 bucks almost and still make a small profit since I'm into them for 20.91, plus I still have all the warrants from before. So I can use that money and invest in other SPACs that have already fallen. SPACs that are close to 10 bucks that I already know what the targets are, or some of the other growth stocks I've been looking into that we already know like a lot about the companies. We already know the valuations. We know what their 52-week high were. We have much better expectations of what their revenue projections are for the next few years, and now they should be recovering. We have the economy that's fairly strong right now. So there is a huge opportunity cost to owning PSTH right now. Alright, and to wrap up to the video, when I look at the list of SPACs, I don't really see anything that would be a good replacement one-to-one for PSTH. A lot of these are much more speculative because let's face it, we talked about it throughout the video. Right now, PSTH offers a lot of safety, and worst case scenario, like when they announce a merger at some point, I mean, the company is going to have a lot of revenues. It's going to be an established, mature company. Maybe they'll have some profits, the forbidden word, and they will have good long-term growth potential. So I'm not going to replace that with a company that's super speculative. Even companies like Rocket Labs, which I like and have a position in and I want to add more in the future, well, I can't replace like long-term safety and growth with short-term speculation that may or may not work, right? Like you want to keep your portfolio balanced. So not necessarily Rocket Labs. I'm much more interested in one of the other companies that have been really beat up over the past couple of months, like established, mature companies that have long-term growth potential. And that's going to be one of the later videos this coming week, right? So I'm going to talk about the stocks that I've been buying. Today I spent $20,000 on one of them. I'm getting 1% per week in covered calls. And also there's the dividends video that will come out in next week. I know a lot of you have been requesting it. So stay tuned for that. But in conclusion, I am going to be selling PSTH to buy those other companies. Just feel like the value right now is not great. I mean, we might as well just wait and see what target they announce. And then if we like it and the valuation is good, we can just get into PSTH again. And the short term, it served its purpose, right? The purpose was to park money into it and use it as a piggy bank. Well, now that there are good buying opportunities in the market, I think it's time to sell this one and go buy the other ones. But I'm open to opinions. Let me know in the comments. I mean, I still have them right now. So if someone gives me an amazing argument for keeping it, I'll reconsider it and maybe I'll keep them next week. So let me know in the comments. I'll see you guys later. Thank you for watching.